Like a lot of organisations, we spent the last few months dealing with all the issues around COVID-19 in order to make the best of a bad situation. But first of all, I'd like to thank our staff very much indeed. All my colleagues have done a great job dealing with the situation in a very resilient way. I'd like to thank them very much indeed. I'd also like to thank our supply chain and our customers, and we've all worked together to make the most of the situation. I think we've been helped hugely by our decentralised approach, where lots and lots and lots of decisions are made quickly, where they can best be made to have the biggest impact. We're also, in that time, our order book has grown 5% up to 8 billion, and that gives us a really good feeling going forward. Our strong balance sheet, and in particular our strong cash position, enables us to make the right decisions, or what we think are the right decisions, both in the short term and the long term. In the short term, we're able to pay our supply chain even quicker, which is really important at the moment, and indeed we are planning to repay all the monies that we have claimed on furlough. In the long term, it enables us to invest in our urban regeneration, our partnership housing business. So all in all, we're in pretty good shape.
So if we look specifically at the numbers, the results for the period have, not surprisingly, been significantly impacted by COVID. We got off to a really strong start in the first quarter, with revenue up 17%. But then following the lockdown, for the second quarter, revenue was down 23%, such that for the first half, group revenue was down 4% to 1.4 billion. And then, not surprisingly, profit was significantly impacted, with profit before tax down 57% to 15.7 million. On the plus side, the balance sheet and liquidity has really strengthened in the period. Average daily net cash has increased to £153 million, which is up 30 million on the prior year number. And the net cash at the period end was 146 million. So a really strong net cash position for the group. So not surprisingly, each of the divisions has been impacted by COVID, either financially or operationally, and some more than others. But the good news is that our order book at £8 billion is up 5% from the year end. And what that does is give us greater visibility for the second half performance now. We're now expecting profit before tax for the year to be between 50 million and 60 million pounds. Obviously lower than where we would have liked to have been, but nonetheless still a very strong performance, bearing in mind the current conditions with the global pandemic. And what that does, it stands us in really good stead for 2021 and onwards.
We're in a pretty good place considering the situation. Our strategy is unchanged. It's organic growth and making our businesses better and better and better for all the stakeholders. We're in all the places we need to be in, and we don't envisage moving into any other markets. Our order book is good, our level of preferred bidder is good, and indeed our inquiry levels are high. I mean, there is no doubt that we're going to be moving into a situation where the markets we operate in could be a little bit weaker, like the rest of the economy. But I'm really confident that we will increase our market share. Once again, I'd like to thank all our stakeholders, our staff, my colleagues, our supply chain and our clients for all working together in this situation to make the very best of what could be a bad situation. As we're going forward, now we have greater clarity of what things are looking like, so we go forward with quite a lot of confidence.